and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Olivia Grace Curran. US markets were choppy on Friday off the back of fresh inflation data and a verbal tussle between US President Donald Trump and his Ukrainian counterpart, Volodymyr Zelensky. Wall Street ended higher after volatility, the S&P 500 recovering after falling immediately after the Trump-Zelensky clash. The Nasdaq and Dow also ending in the green. Nvidia and Tesla rose almost 4% each, while crypto stocks pushed higher after Bitcoin turned positive on Friday following the latest PCE figures. Shares of Coinbase and MicroStrategy up between 3 and 6%. Dell Technologies shed more than 4.7% following the company's fourth quarter revenue miss. New York-based insurance and investment firm Voya Financial rose after Morgan Stanley upgraded the stock to overweight from equal weight. Shares of payments app Expensify jumped more than 20% after reporting fourth quarter revenue and adjusted EPS above Wall Street expectations. Shares of energy utility company AES popped around 11% on full-year results that beat analysts' expectations. US shares of Chinese firms fell after China vowed retaliation if necessary against President Trump's threat to impose an additional 10% tariff on goods from China on March 4. US-listed shares of Alibaba and PDD Holdings declined, while automakers Li Auto and NIO also declined. Shares of pharmacy chain Walgreens shed on the back of a downgrade from Deutsche Bank to sell, and shares of online language learning platform Duolingo plunged more than 17% after guidance for adjusted EBITDA in the current quarter came out below analysts' expectations. US Commerce Secretary Howard Lutnick has confirmed that tariffs on Canada and Mexico will come into effect on Tuesday. However, he said President Donald Trump will determine whether to stick with the planned 25% level. Lutnick says the two countries have done a reasonable job securing their borders with the United States, though the deadly drug fentanyl continues to flow into the country. It comes after US Treasury Secretary Scott Bessent encouraged Canada to follow Mexico in matching US tariffs on Chinese goods in a bid to avoid the levies imposed by the US. Lutnick says Trump is expected to raise tariffs on China on Tuesday unless the country ends fentanyl trafficking into the US. Meanwhile, economic data on Friday sent mixed signals to the market. Core PCE inflation eased to 2.6% as expected, but consumer spending unexpectedly dropped 0.2% in January. Expectations the Fed will cut rates by at least 25 basis points at its June meeting edged up after the PCE data. Markets are now pricing in a 75% chance of a cut. Investors are now bracing for the labour market impact from actions by the Department of Government Efficiency under Elon Musk. US Treasury yields sank to new multi-month lows on Friday. The 10-year yield fell to 2.21%, its lowest since December 11, after Zelensky-Trump headlines. It later recovered to 4.22%. The US dollar initially edged lower on Friday after the inflation reading. The euro dropped following the Trump-Zelensky meeting, while the Aussie has risen slightly to 62.1 US cents. And Bitcoin has risen almost 10% after US President Donald Trump took to social media to announce the names of 5 digital assets he expects to include in a new US strategic reserve of cryptocurrencies. Oil prices fell on Friday and were headed for their first monthly drop since November, off the back of an argument between the US and Ukrainian presidents, as well as markets bracing for Washington's new tariffs and Iraq's decision to resume oil exports from the Kurdistan region. Brent crude futures settled at $73.18 US a barrel. Gold prices fell over 1% as the dollar held close to 2-week highs after the US inflation data, suggesting the Federal Reserve may adopt a cautious stance on additional rate cuts. For more on markets with a focus on Indian equity market performance, Mugunthan Siva from India Avenue Investment Management joins me now. Great to have you in the studio. Now, I've seen that on Friday, the Indian market experienced its worst day in nearly 5 months. So what's going on there?
Yeah, so if you look at India's equity market performance post-COVID, over the last 5 years, it has run at close to 15% per annum. And that was really fueled by a lot of local investors jumping on board where they had not in the past. And this had sort of given the market a little bit of overvaluation. So this correction we've seen really since China stimulus was announced in late September, almost 5 months now, has been driven essentially by investors looking for other opportunities due to the high valuation of Indian equities. And that's led to peeling off of about 15% over that time.
And what impact is all the Trump noise having on the market?
Well, I think rather than specific to India, it's just general uncertainty around tariffs, uncertainty around policy. India doesn't export a whole lot to the US. I think it's around 75 billion in total. So it's not a huge component yet in terms of its overall export, but I do think there's concerns about what the impact could be from a global perspective, and that rubs off in terms of sentiment and volatility on all markets, including India.
And you have just returned from India. You took a group of investors over there. So what was that experience like?
Yeah, I've just spent the whole of February in India, which included a 1-week tour of 17 people from Australia and New Zealand. We essentially feel it's much better to look at things on the ground, observe them yourselves. So we met with a deputy governor of the central bank. We went to the stock exchange. We visited companies, fund managers, brokers, really to get a full understanding and grasp of what's going on the ground from a longer term perspective, but also understand perhaps some of the forces behind the recent market pullback, and understand perhaps that this might present an opportunity for Australian investors who haven't invested yet to consider India as part of their portfolios.
How did that trip change some of the preconceived ideas that investors might have had about the market?
Yeah, I think once you're there, you appreciate the scale, and I always put it in terms of 50x. So India's got 50 times Australia's population, and when you go there and understand perhaps the scale and the economies and the operating leverage opportunities for companies there, it's more about being able to engage with a customer, cross-selling opportunities, expanding your product range, innovation, which I think is not necessarily something that we see and experience every day, just that sheer scale. So I think once people witness that, they understand the opportunity.
And how is the Indian market comparing to others around the world?
Yeah, so look, long term, I think the demographics and the fundamentals are 1.4 billion plus people with an average age of 28, with significant amount of people in the workforce. So that's going to keep fueling the market. It'll have its bumps along the way like it's seeing at the moment, but longer term, I think, I was just looking at this yesterday, the 20-year return for Australian investors in Australian dollars in Indian markets is about 12%, which is pretty reasonable over a long-term period of time.
Now let's get a little bit more specific. So the mid-cap and small-cap indexes, I saw some news on those. Are they underperforming?
Yeah, so from 23 and 24, the mid-caps and small-caps had experienced very strong outperformance. That was driven by local investors, as I said, joining the party. In fact, local investors added 60 plus billion US dollars into markets last year. They're still underpenetrated in terms of investing in their own market. So that drove up valuations of these companies, and those are the ones that have suffered the most in the pullback. But we think they're approaching interesting points for investment, and our firm actually is focusing on launching an active ETF just later this month, to take advantage of those opportunities.
And last time we spoke, we discussed the IPO market in 2024. So what is that looking like this year?
Yeah, the issuance has been significant in 2024. As we discussed, one of the largest listings was Hyundai, which is not listed anywhere else in the world outside of Korea. Several companies are coming to market, usually a sign that markets are fairly well valued. But I would think that would continue going forward. There's such a huge appetite for investing from locals that I wouldn't be surprised if more foreign companies listed in India.
And just your global outlook on how things are going at the moment, how would you describe it?
I think we're very early into the US presidential term. We need to see some of the policies and understand potentially how things could play out in 2025. At the moment, markets will be volatile and very responsive to short-term data and news. But I think once the dust settles, we'll find another investment opportunity which is perhaps at lower prices, which is attractive.
Well, great to get your insights, Muguntan Siva from India Avenue Investment Management. And just before we go, getting one final check on where the local market is set to open when trade gets underway. SPI futures are up 48 points. Well, that does it for this edition of The Global View. Stick around, the Open is coming up next.